It is a little annoying when you see an obvious trading setup but you don't press the button. This is one such instance I wrote about in July. I should buy Berkshire Hathaway BRK. But again, while the Nasdaq zooms with Fed new money, the time is not right. If inflation rips, then all the hokey old Buffett businesses will do great, because the one thing inflation does is get things moving. Back then the chart looked like this. Now it looks like this. The reason you do not execute is fear, and while this is great news for Berkshire shareholders, it is another reason to be very fearful in the market. The market is meant to be a super efficient valuation mechanism, but it appears to be broken. In a nutshell, a company the scale of Berkshire Hathaway should not be performing this way. The stock market has lost its ability to value companies and is now a warehouse for cash. It all goes back to the Federal Reserve and their bailout programs, where the cash in the main is sequestered in the banking system. Banks have the wherewithal to lend vast amounts but won't. It's understandable, because who exactly do you want to lend new money to in this apocalyptic economic environment? But money is like honey, given the slightest chance it flows and pretty soon gets everywhere. The money is escaping into equities, initially the incredibly liquid big cap internet darlings, and it is now filtering down the hierarchy to the next division. One mechanism is said to be covered call trading. The incredible recovery in the market has brought in the buy the dippers, and the FOMO, fear of missing out, crowd, which have fueled a big spike in trading in options. This has pushed up premiums that has driven call option sellers to sell calls and buy the physical stock to cover their upside risk. The call sellers, buyers of stock to cover their call sells, pushes the stock price up and draws more option call buyers in, which drives up premiums, which attracts call sellers, and the virtuous circle spins with a progression of ever higher stock prices. If this is the loop driving this bubble, there will soon be hell to pay. However, it's not the only factor at play. Warren Buffett himself is indicating another driver: inflation. He has bought into Barrick Gold, an obvious inflation hedging move, and is focusing on buying into Japan, an economy of legendary deflationary tendencies. If you were to hedge your cash pile against the possibility of US bailout-driven inflation, you too would want investments denominated in yen. Not only is Japan a very COVID-resistant society, it is also the master of creating liquidity for its economy by enabling debt rather than dropping helicopter money on its citizens. The neutral effect of QE on inflation is ensured by matching new assets with new liabilities, and that stops cash quickly escaping into the hands of people who would obviously go spend it as fast as possible and drive up prices in the process.